Well, g'day there, everybody. Thanks a lot for joining me as at this Thursday afternoon market recap. This afternoon's video, it's not really going to be all that much of a detailed market update. You can go back and have a look at some of the past public YouTube updates to get that information. Otherwise, have a look into that pro analysis class for some more intricate information. Instead, I'd rather focus on a couple, or at least the majority of stocks in our top 12 individual trade list. Very quickly, the markets today, they did stabilize. We saw the industrial average, it closed up just over 100 points. The S&P 500, a similar type of candlestick, up just over 10 points. And the NASDAQ, up just shy of 45 points on the daily time frame. Now, what we haven't seen at the moment, very quickly again, is that of a bull flag type of setup. We were sort of interested to see whether or not this market was going to actually pull them back down, potentially retest some of these now rising exponential moving averages, which are now suggesting, or at least giving us bullish sort of crosses to the upside, even though largely, again, they are still moving sideways. But it's really good to see short term that the markets is still holding in after, of course, this very strong reaction and bounce off from this intermediate trend line. Now, if you've been following this public YouTube channel for some time, you'll understand that during this correction, we've been bringing down the bullish trigger. And the bullish trigger on the markets now, or what has been for a number of weeks, was back down here at 25,465 on the industrial average. Those diamond positions are exceptionally profitable. We've got the SPY position open down here at 2,831. Not to mention, of course, that this goes back historically to some of these past green triggers as well, whereby we've been actually entering into the market on a longer term sort of duration, expecting ultimately the market to crack above its all-time high and then move into a trending state further into 2019. So again, although we haven't technically broken above the swing highs, we are still looking at this. And the reason why I'm very briefly bringing this up is because, again, although we do not have that of a sort of a bull flag setup, we do have that of what appears to be potentially a little bit of a stair-step consolidation. I am still completely open to the very simple fact and the very simple reality that these markets may come on back down, but at the same time, the more I see these markets more or less move sideways, and it's rather sort of tight and also controlled type of state, all right, the more it sort of potentially opens up the doorway for these markets, essentially just to crack above that of Tuesday's swing high candlestick on the Dow Jones, again on the S&P 500 to crack above Tuesday, which is then going to open up, all right, the target for these markets to collectively come on back up to their April and also May swing highs and largely all-time highs outside of, okay, the Dow Jones Industrial Average, which still failed, right, to confirm the movements that we saw in the S&P 500 and also the NASDAQ, taking us back to September and October of 2018. So again, pay attention to this. If you're looking at these oscillating indicators on the daily time frame, they are still overwhelmingly positive, all right, across the board collectively for the closely three followed US markets. However, what is still somewhat problematic is the fact that these weekly, or at least when we go out a different time frame into a larger fractal, you can see that on the weekly time frame, the weekly duration, we are still technically putting that of a sort of a bearish print. Now, again, this lags. Obviously, it lags a lot more than what the daily time frame is going to show us. That's why essentially we've got these aggressive trend lines coming off from, all right, the primary bullish macro trend line, which is on my screen in that sort of magnetic color down the bottom here. This is why we call this an intermediate trend line. So again, essentially, even though in the weekly time frame, these oscillators are a little bit sort of technically bearish, as long as we remain above this aggressive trend line, okay, we're expecting this market to continue to higher prices. It's really as simple as that. If you want to reduce technical analysis or components of analysis, right, different fractals of analysis, down into a very simple narrative to obey and to trade with in the overriding sort of macro direction of this market as it continues to move higher. So that's going to do us when it comes to, again, the macro backdrop. Please have a look into that analysis class, that Pivot Point Pro analysis class, if you want to find out more when it comes to the analysis. There's actually a link below this video whereby you can go in and have a look at that class if you follow the prompts. Now, when it comes to our top 12 individual trade lists, again, we've been waiting for the bounce, right? The oversold nature to provide that of a whipsaw to the downside. Also to close some of these open windows on some particular stocks, which has largely happened, taking us back to the early period of March. And again, for what has been that of the month of June, it has been a pretty bullish month, not only for the markets, but also for a handful of individual stocks. The long trade on Apple was at 184.61. In fact, we still have this open window that at this particular point in time, although we have some reversal candlesticks, Apple continues to push on up to higher prices. So again, a pretty decent trade there. We're still up about $10 of intrinsic value on those original positions. If you wanted to tighten your stops, or at least tighten a portion of your stops, you could place essentially a stop, a very aggressive stop below that of Wednesday's candlestick. Otherwise, just keep it where it is, and then over time we'll bring this up when we have more information to work with. But as it stands, a pretty decent trade there on Apple. Amazon rocketed through our 1,828 entry. It's trading up at 1,870. Technically speaking, if I zoom out and show you this, we are looking at Amazon coming back up to roughly $1,960 a share to begin with. But what gets exciting, or us exciting about this, is that if we can actually close above this, break above 2,000 and move above 2,025, with this position here already at 1,828, again, the opportunity for the markets to move into a trending state and also a bunch of these tech companies to follow suit is very, very exciting. All right, so we might be very much so, right, early days in potentially this trend continuation whereby we've entered it at a very nice location. Technically, we still have a gap that could and may very well close, but as it stands, we're still holding up above that original entry price. Boeing Airlines, no trade at the moment, still moving sideways. We haven't seen the breakout or the breakdown of that stock yet. The same is true for Baidu, still largely moving sideways at printing at about 114.01. Pay attention to the Bollinger Bands. They're starting to squeeze. That will set up a definitive Bollinger Band squeeze within the coming weeks, okay? So that is a pressure cooker. It's bubbling away, although it is technically sleeping at the moment. We should see it awaken relatively soon. And my estimation, or my guess, is that it's going to be a positive break to the upside, much like a lot of these individual stocks that we're looking at. We've got Caterpillar. Although it only closed up 7 cents today, we're pretty much at break even at 127.05. What's more important, however, is the likelihood that this is going to be that correctional base for Caterpillar. So the worst is in for this Caterpillar trade, and now we're going through the process of at least back testing, right, this aggressive trend line, or if not, overshooting it back up to roughly 145 to close this window up here at 142, and then potentially again closing to higher prices. We've got COP largely doing nothing. This is a stock whereby we haven't shorted it, but we've been waiting for this to actually set up that of the continuation. One thing I will say about this stock, pardon me, I feel like I'm losing my voice at the moment, is that we've got this very important macro primary bullish trend line here. So as long as we remain above this line, much like those lines that I've pointed out on the overall market indices, this is a very favorable stock moving forward. And we may be very close to, right, the absolute bottom on this for this sort of cyclical correction that we've seen within that of the macro primary bullish uptrend. All right, so there's a lot of upside potential in COP, even though, again, the sentiment is relatively bearish on COP. So I would not be surprised to see a COP sort of pop over the coming weeks, whereby you will see this stock up, even on no apparent news, whereby we could see it up 4, 5, 6%, all right, out of nowhere. And that will be the institutional money, the institutional traders jumping on in and kickstarting that trend. So pay attention to COP. CVX is pulling back a little bit from our 122.47 entry. Again, this has been a very volatile stock with what's going on with the US dollar and also obviously the price of oil. So we've been largely just staying away from this. But again, every time it seems to break out, it pulls back. Every time it seems to break down, it pushes off and vice versa. And again, it's just continuing that. So the majority of people, again in pro, simply aren't really wasting all that much time overthinking CVX. They're really just leaving it and moving on to better trades, one of which is Disney. Disney today closed up over 4.44%. And this is quite interesting because although I just referenced a type of move on COP whereby I said, pay attention, you should see a 3, 4, 5% bullish day over the coming weeks, just out of nowhere. I said exactly the same thing for Disney as we were going into the Bollinger Band squeeze within that of that primary bullish uptrend, bouncing off from, or at least coiling into at the time, these rising exponential moving averages. People absolutely switch off at the wrong time. They forget about the stock that has essentially or technically broken out and moved into a trending state. And as at that time, right, just as we start to see confirmation of the break of the swing high and the pullback back into the rising exponential moving averages, boom, off we go, up $6.02 today on Disney. If I show you this on the ADX and also the CCI, the ADX is reset from, of course, that very quick move it had, right? Essentially for the month of May, we moved sideways. It allowed the ADX to reset. The CCI is still holding very firmly above 100. It's printing at 115. And now they are turning up with price action bouncing off from the exponential moving averages mixed with the long day Morobozu candlestick. You cannot get more bullish than this on an individual stock. So for all of you in Pivot Point Pro who have been waiting patiently on this stock. We were back looking at this stock when it was $111.68, right? Being as precise to look for a reversal out of this green rectangular box. This was down here. You can see the number on my chart, 108.40. And that was essentially almost to the penny the low of this stock. 108, here we are, just above or just shy of 142 at the moment. So a big move here. We haven't captured all of it, but we've captured a big majority of that move. And you should be excited because, again, these stocks over time are going to collectively break the swing highs, much like the markets are going to do. And then a lot of people are going to essentially realize that the train has left the station. It left the station a long time ago. And then there is going to be a frenzy of people buying stocks, right, after the breakout, which is just going to add fuel to the fire as we see these equity prices continue to push to new all-time highs. All right, that is essentially what is underway. Whether or not we do that within the next couple of weeks, whether or not we do that within the next couple of months, it's coming. Okay, so front run the trade a little bit. Okay, step up, because if you simply don't, you're going to be one of the late comers to the party. All right, it's really that simple. Now, Google again, holding above 1,082. It's only at 1,091, so barely, it's really just a negligible move at the moment. It's $9. We've closed the open window. But again, this just here, this looks like an E for an exhaustion gap. It may be done. This might be, technically speaking, the low for Google. If we get a secondary sell-off, look for a double bottom and a rising second bottom. And then that's essentially going to give you, right, the foundation for this trade to come up and close the window up here at 1,275 for Google. Okay, so pay attention to that. It doesn't have to play out that way. I think there's a chance it will. And the reason I say that is because we still have open windows on Amazon. We still have open windows on Apple as well, not to mention a few other companies. But again, I think you start, or I'm hoping at least, that you understand the narrative of the market. Now again, going back into IBM, we've been stalking this stock as it has continued to sell off. Our bullish entries were at 132.40, and then more recently at 135.22. We're printing at 135.76. Again, surprise, surprise, a little exhaustion gap, or what we would call that of an island reversal gap. All right, a very bullish sort of a chart pattern, which is set up mixed with, of course, gap theory, mixed with candlestick patterns, if you wanted to call this a tweezer bottom off from a logical area of support. If you bring all of the concepts together, or at least the components of analysis, right, it adds to a very bullish picture. That's why we're seeing prices rise on IBM. This is an exhaustion of the sell side volume in IBM, whereby we tried to close the gap. We didn't actually close below, right, the support gap or the gap support, and now essentially we're just rallying out of this location. So again, another stock that we're pretty happy about. And not to end on a bad note, but Netflix, it still hasn't technically broken above 366. We're down at 343, but I'm very confident in this trade still. Again, we're still going through the pressure cooker of this. You can see we're in a little bit of a Bollinger Band squeeze. One of these touches is going to hold, it's going to firm up, and then we're going to skyrocket. So again, mix it, or at least when you look at some of these stocks, tie it into how the market is standing. Again, you could even call this a little bit of a diamond pattern, which is a very rare pattern. I generally don't like to call out those patterns unless they are sort of definitive. And we have done that over time in the past prior to big sell-offs. But in this particular instance, this is more so that of a stair-step continuation. Looking to price us into potentially the retest of this high a lot sooner than a lot of people actually first envisioned. Okay, so if you have any questions, email me. Otherwise, jump into that analysis class. It's on Saturday, whereby I'm going to sit down again for another 90 or so minutes and recap the markets and also provide you with forward-looking analysis. In these YouTube updates, they're sort of retrospective updates on what we have spoken about in Pro. Pro is forward-looking, whereby, right, of course, outside of the market analysis, whereby I give you my thoughts as to what is sort of under construction. When it comes to the individual stocks, we're generally looking backwards in these public updates like I've done today, largely just giving you updates on those positions. All right, so on that note, everybody, enjoy the rest of your Thursday evening. I will see you, not on Friday, but I will see you on Saturday in that analysis class, the recorded class, which again, as always, will be posted up online on the website. All the best, everyone. James signing off on behalf of Pivot Point Trading. Farewell.